Interest rates have gone insane. And when is this going to end? Are we going to continue seeing rising interest rates for the rest of the year here in Canada? Well, we want to talk about that today on this video. So if you're wondering, is it going to be like the 80s? What can we expect moving forward over the remainder of 2022? And if you're a first-time seller considering refinancing your property or maybe wanting to move up, what is that going to look like over the next couple years? Well, we're talking all about that on this video today, and we're going to do it right now. So I'm here today with Adam and Hugh, who are mortgage brokers in our office, and I'm super excited because we're going to dive right in. We're going to give you the meat, the goods, and we're going to talk about why are interest rates going insane right now and what can we do about it. So here we go. Are interest rates going to get as high as the 80s? Because I remember my parents talking about crazy high interest rates. When is this all going to end? What do you guys think?
Yeah, we're in a funny spot right now generationally where the buyers right now are maybe one or maybe two generations separated from those horror stories that people tell about the 80s, 15, 16, 17, 18, 20% interest rates on mortgages. And I think, there's really sort of two things to bear in mind when you're thinking about concerns around where this period of elevated inflation and rising rates to battle this inflation could go. Yeah. And one is that if you think about the cost of borrowing right now and the spread between incomes and that cost of borrowing anything, the cost of living in general, interest rates simply cannot get to that level because we've got bigger issues at that point than just the cost of borrowing and the cost of living. I mean, that is like, I don't even want to think about what things would look like if we had to deal with interest rates like that now. And the people who are pulling the strings in our economy recognize that we can't get pushed that far. It's not possible. But more on sort of a dynamic and specific scale, the Bank of Canada really has one mandate, and that's to keep inflation at the 2 to 3% mark. And they've got really one tool to do that. And that is raising or lowering the cost of borrowing accordingly. And so, back in the 80s when incomes were what they were and the cost of living in general was what it was.
It was all like this
proportionally. The inputs that a central bank had to put into the economy in order to cause the consumer to leave the economy had to be much greater. Because if you think about where incomes have gone now, from then to now, they have risen, but they've not risen by the same proportional amount that the cost of living has risen. And so,
but not everywhere.
Not everywhere, of course.
Because some places have definitely risen a lot. It's been a much bigger gap.
Oh yeah.
And I think that's also what we're seeing too right now.
Absolutely.
Right?
Yeah. But, and some of the tighter markets, like the big markets like Toronto and Vancouver, of course, where we talk a lot about the absurdity of the cost of living.
And that's where a lot of the news, everything comes from, is out east. And they make decisions there, and so we're feeling crunches because of that. But it's always been that way in Calgary. It's kind of felt that way a little bit, right?
It's the downside of a smaller population, a huge country, vast country with a couple of really massive cities. That it really is sort of like a lot of this news, a lot of this topic is focused in on those cities, and so it is a little bit different here. And I think the other thing to think about too, just in the scope of rates rising, is the sort of the prudence that is built into the stress test, and the Bank of Canada's qualifying rate, which didn't exist in the 1980s. And so there was hardship then, and I don't discount the stories, or I don't dispute the stories of people leaving keys in mailboxes and that sort of thing. This does happen from time to time in these periods of extra financial pressure, but the Bank of Canada's stress test rate is really doing what it was designed to do, and it's protecting Canadians from this period of elevated pressures. And I think external to that, you don't be concerned about rates going into that 1980s range. They just can't, and they don't have to in order to cause us to leave the market for a little minute.
Could they go double digits?
Yeah, it's a good question.
It's legit, like it's real, like it's something that it doesn't seem too far out. I don't know.
One thing that I have recognized is that in the past, the Bank of Canada has only ever been able to break the back of inflationary periods by raising the overnight lending rate over the rate of inflation.
Right.
So is it possible to get there? I mean, I suppose it's possible. I think based on what I'm hearing and based on what we're seeing from economists now, I think that would be too much, and that would be untenable.
Yeah.
However, it might be a moot point. Inflation numbers were released today, and we've come down again. So it's all going in the right direction.
If you've been following the Calgary real estate market over the last number of months and been watching our videos or going to our website, we want to tell you something special. There is a real lack of homes on the market right now, good properties that our buyers are looking for. So if you have thought about moving up, moving down, selling a rental, whatever it is, we should talk. And if you don't know already, we have already helped a family move every 14 hours so far in 2022. So go ahead, click through, and let's chat. So when is this going to end? When are we going to stop seeing these increases? I mean, in September when they did that increase, that was, I think, a lot bigger than what some thought. Maybe it was others were going right on. I don't no idea, but in all of that, are we going to see more rate increases as they come along?
Yeah, so I mean, we as mortgage brokers rely on economists, and we rely on chief economists, and we rely on the folks who run mortgage companies, mortgage lenders. We rely on what comes out of the Bank of Canada as well. And it's interesting, if you look back to what was said in December of last year, some were calling for the overnight lending rate to finish up at maybe 1.25%, and here we are now pushing 4%, and we may get there by then. So where does this end? Most economists are sort of agreeing now that there's probably another maximum 75 basis points coming before the end of this year, and that'll do it. That'll be enough to kind of put a cap on this. Would it be that much? Would it be something more like 0.5% or even 0.25%? It remains to be seen, because this is all determined on data that comes out, as you go. Then I think the real question is, how long does that last?
Yeah, that's what I was just going to say.
And that's really tough. You can find all kinds of different perspectives on that. Some are saying, we're going to find ourselves in a recession much sooner than we expect. And typically in recessions, we see rates come down. Others are saying, prepare for like maybe a year or even into the end. I've heard as late as into the end of 2024 before rates start to fall back. So, when you're looking at a spread like that, the law of averages, and the changeable aspect of the data. I mean, it's really difficult to explain to people.
Well, and I don't even think they know. They being
don't.
Who's making the decisions. Like, I feel like they are just kind of playing this as they go to, right?
They read the data, and the data changes, and they have to change what their call is, and there's no real fault there at all. And I've even heard a couple of economists say, like, it's hard to explain to people that, Russia decided to invade Ukraine, and now your mortgage in Canada has to cost more. That's just a perfect example of these things come out of left field, and we're also intertwined. But where's it going to end? 6 months to year and a half, 2 years.
Interesting. Well, there you go.
Not very specific.
You heard it. You heard the vagueness here first.
I am not in the game of predictions. I'm not an economist. I'm not an economist either.
So next thing is, should you lock into a fixed rate? Because now, in the past couple years, there was a lot of crazy cheap variables, even cheap fixed rates too. But this variable fixed rate conversation is kind of all over the place. So is it something that is worthwhile really diving into and having a set plan, or is it trying to be flexible with when you are actually making the purchase?
Yeah, I mean, we have this conversation every day with people who are asking, if they're buying, should I go with fixed or variable? The people who have just bought a house or who currently own a house, should we convert to a fixed? And I think for the people at the moment who have bought their house in the past year, 2 years, whatever it is, I think they should hold their guns and stay in variable.
Right.
Because right now, the variable rate and the 5-year fixed rates or fixed rates are basically the same. And so if it's going to go up a little bit more, it's going to come down, and I think we agree on that.
At some point,
But the thing is, if we do convert to a fixed, you are now then stuck with this higher rate for the remainder of your term, be it 1 more year or 2 years or 3 more years, or even 4.5 more years for people who just bought. So I think for those people, it's likely better off to stick with variable, because it is going to come down, and you will look back at this in a few years' time and go, I'm really pleased that I stayed with variable. And there's a bit of pain right now, and obviously we understand that. Our costs have gone up. There's also a good thing to remember is, now that variable rates have kind of hit what fixed rates are and what the fixed rates would have been when people first took out their mortgages, you would have been paying this for the past few months, however long anyway.
Yeah.
And now you would continue to pay it. So I think people should stay with that. If people are looking at buying now, I think the same answer goes for them. Variable is still probably the way to go. But if you are somebody who will really lose sleep at night and you do not want the stress of it, a 2 or a 3 year fixed might be the better way for you to go.
What is the difference in cost of those typically compared to like a typical 5 year?
Typically it's a little bit less, actually. I mean,
it fluctuates. It fluctuates based on pressure.
Yeah.
Okay.
And so,
and I guess that kind of follows what you were saying. Is that is a great reasoning, because if this is lasting for another 2-ish years on the far end, having a 2-3 year fix could mean you're coming out on the other end.
Coming out on the other
timing.
end, yeah. And then at that point, you would say, well, now is the time to go with variable. So you're kind of doing the same thing by staying with variable, or doing a 2 year fix. This is for people who are buying, but so this really comes down to what's going to keep you up at night. Is it the fear of them hitting the 80s levels, or is it I actually see the long-term goal and the long-term benefit of a variable rate mortgage?
Yeah.
So that's really the advice that we're giving clients, and I think they all agree that that's the right way to go. And I think most people are understanding that the rates have gone up, and we've anticipated it. The last 2 have been kind of more uncomfortable, I would say.
Yeah.
But again, that is what it is for now, but it's going to come down, and if you look over 5 years, you'll probably be thanking yourself that you stuck with variable.
Well, and doing a variable too, it's a very long-term game.
Yeah.
And it's not, like we were talking about before, it's not this 6-month window where you can fully say, yeah, I'm good,
sure,
this is the best thing.
You can't look at, or you shouldn't. I suppose you can look. You can
totally.
You can look at this within any scope that you'd like, but you really ought not to look at this particular period, if it's 6 months long, or if it's a year, or if it's a year and a half long, and base your judgment on whether or not your variable choice would have outperformed a choice to go with a fixed in the same period. You really ought to wait for the end of a 5-year term on the variable
to get a feel of it.
And historically, you're going to find that variable has outperformed the fixed in a 5-year term. There are very few periods where the variable hasn't outperformed the fixed overall. And I mean, history. I don't go just by what I'm saying, but history will tell us. You look at a 25-year repayment schedule, and the variable has outperformed the fixed always.
Yeah.
And so we're in it too. Like we also have mortgages.
Yeah, totally.
It's some pain right now, and it's not the direction that you want to see your payments going.
Yeah. But at the same time too, like I know for us, like we're in a variable, and it went up. Like it hit that rate last month, and part of it is what it is. But we've been in a variable for so long. We've been having really good payments for so long. So if it's going up a little bit, that's okay long term. Like I don't feel like it's going to be this, here we go and take off forever, right?
No,
like
it just doesn't need to. I understand that fear because it has done it before.
And you can see it at the pumps. You can see it at different places. Things are starting to shift.
That's right.
Starting to change. So so there's a lot of viewers that are watching.
Yeah.
A lot of them are in their mid-20s to mid-40s. They could be first-time sellers where they've actually bought a house and they are thinking of selling in the next, the next year or two, because it's, everyone moves every 5 years, roughly, because that's kind of your life changes, right? You get married, usually have kids within 5 years, they go to school in 5 years, and then they're in high school in 5-ish years. Like all of these things keep changing, and your house has to adapt. And so there could be a lot of first-time sellers in this market trying to navigate it. What would you give advice to somebody like that, who is that first-time seller? They want to upsize, they want to do something a little bit different, there's a little more equity, but they're trying to find that balance, but they also have their parents who have gone through something kind of talking behind them and giving them advice from when they sold their first house, which could have been in the 80s. And so what kind of advice would you give someone like that?
I think it's very hard to time some of these things.
Yes.
Like we can sit here and we can think we have a crystal ball and look and say, well, maybe we'll wait in a year's time. But it's so hard to do it. And I think it really depends on you and what's happening in your life at the moment. I mean, if you have all of a sudden you're having twins and you need a bigger house, well, you need a bigger house, you need to move, and, you can't time that. And it might be better to do it now than 1 month before or 1 month after your children are born. Whatever that looks like, I think should be the factor.
We moved when Rebecca was about 8.5 months pregnant. It sucked. So let's do it a little earlier if you can.
And so I think that's something that's would depend on your life and what's happening at that point. And I think if you have a house right now and you have a mortgage at the minute and you're looking at buying a bigger house, how much bigger is your mortgage going to be?
Right.
And if you look at that, how much more is your payment going to be and everything else? And I think you're already feeling the effects of interest rates changing, and so you're going to feel them if you move anyway. It's going to be a little bit more depending on how much the mortgage goes up by.
Yeah, and on the real estate side of things, like I would definitely say that if you have, like there's just a lack of inventory in Calgary. And so for those of you that are sitting there and watching this, and I see the comments of the naysayers and telling me we're wrong, but the thing is, there is just a low inventory for the amount of people moving here and the amount of people that live here right now. And so for those first-time sellers, that is a huge opportunity. Don't sell first. Know where you're going to go, possibly, but figure that plan out and talk to a broker to figure out that whole payment schedule, how it's going to look, how much equity, where you at, all that kind of stuff, right?
Well, but selling portability and
that's right,
and that sort of thing as well. You know, what are you doing with your existing mortgage, and are you one of the lucky ones that got to snag one of those 2020 or 2021 interest rates? And you know, are you desperate to hold on to that thing? And I think, you know, at the front end of a mortgage, there's a lot of talk of portability. I think a lot of times portability is just thrown out there as a word. Portable, fixed or portable. You know, you can always take a fixed. It's no problem. You know, on the other end of that,
sound like a construction worker with all those portables going everywhere.
Yeah, it can be like that a little bit. On the other end of that, there is a little bit more.
Or a potty mouth. Sorry, I should.
I like that. That's
potty
good.
mouth. That's a better one.
Talking that much about portables is definitely a potty mouth. But on the other end of that, when you're looking to potentially sell and buy, and you want to take one of these mortgages with you, you know, portability is not necessarily a foregone conclusion. There are some factors and some conditions that kind of have to line up, and the gears have to kind of click in order for portability to work. I mean, it works often, but it doesn't always work. And so that's where, you know, having a conversation with a professional who can walk you through how that's going to work, what that's going to look like, you know, blended rate. Certainly a blended rate is going to look a little bit better, potentially, based on the factors, than taking a whole new mortgage at today's current rates. But is it fitting within the scope of the way you want to assemble this next financial transaction of buying a house? You know, are you stuck with your remaining amortization? Is that going to make, because some lenders work that way, is that going to make your payments really high? So, you know, it's a strategic decision. And but it's one that we're having certainly more conversations with people about, wanting to take those really low, you know, 2%, sometimes even below 2% interest rates with them into a market that's more like 4.5 or up. And then a bit of shock.
And I was going to say, like a pro tip, and this is what we did before we moved this last time, is we actually increased our payments to what we knew we were going to be spending on our new place. So if you're spending, rough numbers, let's say $1,500 a month right now, and you know it's going to be $2,200 in the new property, just up your payments, get your life ready. You're going to pay down that mortgage a lot quicker that you're currently in, or you're going to be able to pay off some of that. But doing things like that are proactive are really going to help set you up kind of moving forward. Would you agree?
That's a great tip. It's like training for your you know, it's like financial training for your next step up.
And even if you do it for a year, being prepared, there's only benefits of it, right?
You're just smashing down the equity or the remaining amortization on your existing mortgage, which is creating equity, which means less interest is going back to the lender. It's win-win-win.
So thank you so much for joining me, guys. If you have any questions for Adam and Hugh, feel free to reach out to them. Their info's in the description below. But if you want to check out more data on what's happening in the market, go over to this video here. Sorry guys, it's over your face. But go over to this video here and make sure that you look at the October market information, because we have some great stats, great information in there for you. And we'll see you guys on that video.